Hey everyone, welcome back to my channel. Today I want to talk about one of the biggest price action concepts I've learned as I've studied both dealer positioning and ICT price action concepts, and it's helped me tremendously. The market is heavily manipulated and seeks to correct imbalances and find liquidity. I'll get into why it does this and how we can use it to our advantage every single day. To show you these concepts, I've purposely picked the most recent non-farm payrolls day, which is notoriously tricky. However, these same principles work every single day, and they especially work this day. I'll show you this on MES, but you can use this on SPY, SPX, regular ES, or any asset out there. The more market maker involvement the asset has, the better. Before we get started, I'll leave several discount codes for trading services I use in the description, including TradeView, Voland, and Elite Trader Fund. Lastly, if you enjoy this content, don't forget to like and subscribe to help me grow this channel. Also, be sure to hit the notification bell to get notified whenever I post a new video. That being said, let's get right into it. So I'll just go straight to the chart in this case, and starting on MES, just to go to the 1 minute to show you where we're at. This is the right before the New York Open on February 3rd, right after non-farm payrolls. So the first thing I want to draw your attention to is this large imbalance, this big sell-off we had here. So this is sell side inefficiency. So basically sellers were in complete control here. There was no room for buyers to buy at all. And this is one thing that market makers will actually seek to correct. So they'll most likely go to fill this imbalance. Also, I'm not gonna draw these yet, but we have these relative equal highs here, which we know that anyone that was short in this area, especially if they took it as it came back up and tested, they're gonna set their buy stops right here, and that essentially creates buy side liquidity, meaning as market makers, their whole job is to provide liquidity to the market. So as they need to sell, as the market goes higher and they want to sell, they need to match that to willing buyers. And one of the best ways to guarantee buyers is to trigger buy stops. The same can be said for these highs up here. But before we do that, let's back it up to the daily, because it's always important to have that daily bias. And so we can see here that we had rejections in the past with these two wicks in this area. This whole area over here is essentially one large order block on the daily. You can see we pressed up into it the day prior, and then we started rejecting in this morning session. Now, if we zoom in here, and this is very important, I've marked this gap right here. So we had this gap up basically where there was nothing that occurred. We just opened higher the very next session. On futures, we're only closed for 1 hour, so gaps this size are pretty rare typically, although they do happen. Now again, this is an inefficiency in the market, so market makers will seek to correct this inefficiency. Their algorithms tend to correct this. So if we go down to the 1 hour, what I want to draw your attention to is a new order block that formed. So we can see that as we push down here, we make this lower low. So we actually blew out all these stops in this area at a break of structure or a change of character on the 1 hour, a bearish change of character, which leaves behind an order block, which is this last up candle before this sell off essentially. So, and then of course we're already pushing into this imbalance, which is going to play an important part. Dropping back to the 1 minute, let's mark these equal highs, because we know if we start moving higher, and what I like to do is BSL, buy side liquidity, and something I learned from ICT. And we can see here we have these relative equal lows. Now, the thing is, if we scroll down, we can see we almost have this imbalance filled. So we've already been clearing this inefficiency. We can see the top of this inefficiency is actually acting as resistance. So the likelihood of completely filling this before making the real move is very, very high. Now, it's unlikely that we're just going to keep dropping. Most likely, since we still have these large inefficiencies right here, these are going to want to be corrected. On top of that, as mentioned, we have liquidity just resting here. That's very obvious. And then if we were to get past that point, we also have liquidity up here. Technically, we should probably draw this at the high. Now, the thing is, as we get into here and as this fair value gap actually fills, we want to see if we're going to have a rejection here, because we always want to be cautious. Now, I'm not going to do the whole session bar by bar, but I do want to show how all these concepts play and talk about why they play together. So I'm just going to go ahead and start. And as we get into the New York Open, we can see right here, anyone that had stops under this is probably sweating right now. We start to blow those out, and this is incredible. So the bell is very close to opening, we clear out all these stops, right? So this liquidity's been consumed. So these are sell stops. So if sell side liquidity gets consumed and we fill an inefficiency, this means that they're like market makers if we're thinking about this, with the idea being that they're going to want to fill this in. We're not sure if they're going to do it right away, but it's a possibility. The idea behind it is that they need to have sellers for their buying, right? Because there's a heavy amount of buying that occurs, so there needs to be willing sellers, which were just triggered, and an inefficiency was cleared up. So let's just let this play out. Of course, they start buying, which we sort of presume here. We want to see if we actually break out of this volume imbalance, and it does actually get tricky. It looks like there's going to be resistance there, but then it just blasts right through it. And this is what's important. We have a clear target here. So even if you're not the best at seeking entries, and I'm not saying I necessarily recommend this, but I mean, I do it myself at times. If I'm confident and if I know where it's going and I can't get the best entry opportunity, I will actually sometimes just buy in, especially with a small position or a short, depending on which direction it's going. Now, in this case, I am trying to be patient. We still have plenty of time. The session is just opening. And chances are, if we do come back down, we want to look to come back down to an order block. So that would be a bearish candle in this up move. So in that case, if we keep going up, we finally do have one. So just marking this candle, I want to see what happens if we retrace to this, right? Because this was our first pivot, make a break of structure. Now we have an order block here that we want to watch. And of course, we want to see what happens as soon as these buy stops get cleared out, right? Because they're going to be selling. There's going to be sellers that want to sell at that point. Sure enough, we break it. Target picked. No surprises there. Liquidity has been hunted because liquidity is what draws in the market. And that's literally what market makers get paid to do. They get paid to provide liquidity to the market. So they're gonna, if they can't find liquidity on the chart, then they're gonna end up adding liquidity in. That's where options dealer hedging and things like that come into play, when they're hedging with Gamma and Vanna and Charm and everything I've talked about a lot on this channel. However, they also like to engineer liquidity, so they don't necessarily have to sell options. They don't have to put their own positions on the table and hedge those positions. So let's see what happens as we pull back here. What we're actually looking for, ideally, would be a retest into that order block. And notice here, and this is what I was talking about before, we push right into this order block, and this up candle before the big fall, we immediately reject, which is what we would expect. So now we want to get to a point where we can actually safely buy in what would be an institutional buy zone, essentially. And as we come down, now actually chances are there are stop orders resting here. So ideally they take these out. Yep, test this area. This would be a buy zone. And then now that we've actually had liquidity taken out here as well, the next stop, we want to see if these highs get taken out. And if those highs get taken out, we want to watch carefully what happens at this order block above, because this is where institutions are really going to, the institutional order flow is really going to start selling down based on the daily buys that we established on higher time frames. But this is now the next area of liquidity. The reason we say that is because we are currently in bullish character. We wiped out two areas that we knew that there would be orders resting. At this point, we did get pushed down off of this. However, we would need to see this candle, this area get cleared past this order block here to be in a bearish character, essentially. And so I've talked about these concepts in my channel before with my trade plan and everything. This would be a perfect area to buy in. Let's see what happens. And as we go, we shouldn't really see us get much lower than these wicks. And we don't. Now we know orders are resting here, which is something that we do want to mark down for later. And so this would be a great point to be in. We have these relative equal lows. Boom, once again, take out the next draw on liquidity, which was those prior highs. The run keeps going here, essentially. And actually, as this run occurs, what's interesting is we do get a new order block here. We do test that, and you could actually buy in, even though it would be very late. This was an actual buy opportunity. As soon as we touch that order block on the 1 hour, this is where it's time to close up the positions and be careful about what happens, because if you've studied ICT or you're familiar with market structure and premium discount arrays and things like that, which I'll try to talk about in short form on this channel, This would be a target, and this is where we would actually start watching to see if we get some sort of character change, right? So that means we want to see if we start making lower highs and also lower lows. Also, we should mark down another area of liquidity here. So this was just an order block retest, which was this order block. This is another area of liquidity that will likely be hunted if we do start to turn around here. But we want to see what happens first. We want to make sure that we actually do make a lower low before we start going short. We can also mark this down because this is another area of liquidity that will likely be hunted, assuming that this order block were to hold, right? Because that's what's drawing the market. That's exactly what these market makers are seeking. So right here, again, this area holds, and we'll see, we're just chopping around. This is also where things start slowing down after a big move. It's best to get your trade in the first couple hours if you can. Now we do start pushing into the 1 hour order block. However, it is a big range, and immediately we see massive intervention here. And this is actually an amazing opportunity. And I've talked about these before in previous videos, but I like to mark these fair value gaps here and see. Now notice this fair value gap didn't clear out. And this could actually be a short opportunity, and you'd want to essentially see how we react to these lows here, because we want to know how, if we're going to start hunting this liquidity and how far down we can go. Also, one thing to note, I mentioned the inefficiencies. So we have this inefficiency here, which will seek to be corrected because there was no, even on the 1 minute, right? We can mark these inefficiencies because they will be hunted. We do hunt stops here. So we do absorb some liquidity there. We do have a fair value gap above us that will likely fill. Now, at this point though, we are still dropping, but okay, so now we just hunted two obvious areas of liquidity, and we did not, now we're pulling back. And so this is where we start getting into, from around 12 o'clock to 12:30, I don't really take any trades because it is the lunch hour. Now we do actually start making higher highs here. We fill this fair value gap. So the next question is, are we going to react to the higher fair value gap up here? How far are we going to pull back into this? Is this going to hold this area? Is this going to hold again? And are we going to reject out of it? And technically, this whole zone right here is just one big bearish order block because we made a big character change off of it. There was also a liquidity sweep that happened right before it, with this area of liquidity getting taken out. So this is a very nice bearish order block for us, where we even had a character change where we saw liquidity get sought after and taken out. So we're looking to take shorts in this area. Sure enough, lunch hour ends. We kind of just putz around here, or excuse me, lunch half hour, I should say, ends. Putzing around. Now, the fact that we're not really breaking into this fair value gap and we're still holding this 1 hour bearish order block, these are perfect opportunities to get in. You can set your stop above this order block, right? So if you're getting in this region within this order block, a more aggressive stop would be right above it. But personally, I would set it above the fair value gap because I'd want to see the top of this. And it's really only 3 points. And all of a sudden now, oh, and I should mention, of course, we want to keep track of where liquidity's at. We know where the inefficiencies are at. This is the immediate target. This is the deeper target. And look what price is doing. Just rips through, blows out liquidity here, blows out the liquidity. Starts dipping into the fair value gap here, which corrects this inefficiency. But we're also leaving behind numerous inefficiencies, which we do need to take into account, right? So we do want to make sure we mark these. But as this move lower happens, and we keep pressing, the next area of interest was this previous order block area, which also has more liquidity below. And of course, that's where we first bounce, but we do not make a higher high. So this order block is likely going to get taken out. And sure enough, it's getting eaten up right now. As we pull back, we're actually pulling back into smaller order blocks that are getting created along the way. We take out this liquidity here, and this order block has also been taken out. Again, we are leaving, this inefficiency was filled. This inefficiency up here was not, right? So when we get right back into that gap, that volume imbalance that we saw earlier, we actually do hold, and we do get a bit of a character change, which can be tricky. The thing is, even though we did beat this high, we still have this order block above that we want to see how price responds to. And we could see just from the candles alone that there was something here. We just saw immediate selling. This would have been a good short opportunity. The question is, how low are we going to go, right? We already took out this liquidity here, so there is some resting down here. This can be pretty deep. And at this point, we're getting later in the day and things are starting to slow down. And after such a big move like that, chances are we do just get a lot of choppiness. But so I'll just stop it here. You can go check the chart if you want to see how this played out. But this is what I mean about the market seeking liquidity. In my mind, it is important to have good entries, and we want to make sure we have minimal risk. But as I've learned over time, it's so important to determine where the market is going to seek stop orders, so market makers can do what they do, which is provide liquidity to the market, whether it be engineered liquidity or it's actually them injecting liquidity, whatever it might be. During COVID, and we had corporate bond buying and things like that, there was a lot of liquidity being injected, leading to bull runs. But in today's day and age, there's a lot of liquidity engineering going on where areas of stops on higher time frames. So we always want to look at the daily, the 1 hour, the 15-minute, even the 5-minute at times. And we want to mark areas of inefficiency to see if they also get corrected, because it's always going to be those previous highs or those equal highs and lows, as well as these imbalances that do get sought after by the market. So if you can get on board and create the narrative and figure out, okay, which notable areas is the market going to be targeting? So when we sweep down here, we fill this volume imbalance on the daily, and we go much higher. This gap was filled after we moved higher after this gap was filled. Then it's where our target is, and then where's the best place to get in. At which point you can use any trading strategy, but the key is just understanding engineered liquidity and how this works, and how we can have confidence in our targets once we identify exactly which areas they're targeting and why. So anyway, I hope you found this helpful. I plan to break down each of these concepts in short videos, like I did the Gamma video as well as a Vanna video, but we'll get into that. But I did just want to create a video on liquidity and what the market's actually seeking and why. So appreciate you watching.